This sample portfolio of my top 10 favorite income stocks will pay $12,292 next month and just over $114,000 over the next year. The largest source of income is Capital Southwest, which pays just over $14,100 per year. That stock is currently yielding 10.14% and the yield on cost is over 14%. If you can't find this kind of information about your portfolio in a few seconds, you might need a dividend tracker. Today we'll look at my two favorites so you can decide if one of them makes sense for you. This dashboard is from Snowball Analytics, the dividend tracker I've been testing for the past few weeks. The annual income is the number I focus on the most, just over $114,000. If you're new to the channel, I retired in 2017, and that's when I got serious about researching and managing my investments, because now they pay for everything. Today's video is more about the managing part than the researching part. I mostly focus on stocks and funds paying consistent yields over 8% or more. And you can see this sample portfolio is currently yielding 9.68%. I created this sample portfolio to compare the two dividend trackers with identical information. It's simply $100K into each of my top 10 favorite income investments purchased at the opening price on the first trading day of 2023, which was January the 2nd. You can see 10 stocks times 100K equals a cost basis of $1 million or close to it. It's been a good year for the market and the sample portfolio has grown by 170K, but as an income investor, I don't really pay too much attention to that number. Markets and portfolios go up and down and I'm focused on the income. It would take about an hour to show you all the features for these two trackers, so I'll just focus on the ones that I use the most. Moving down the dashboard, we come to future payments. This is a projection of the next 12 months. Dark blue represents the official number that's been announced, and light blue represents the estimated numbers. If you hover your mouse, it shows the breakdown by stock within the month. Some more useful numbers are shown on the Analytics Dividends page. Here you can see the yield for each stock ranked highest to lowest. Purple shows the current yield, and the green line shows the yield on cost. If you want to see which dividends are growing the fastest, this bar chart shows average dividend growth over the past 5 years. Another page I use frequently is Portfolio Holdings. The columns are customizable. I've chosen items like when I'll receive the next distribution and how much I'll receive. Also note that under the current yield is the yield on cost for each stock and also for the portfolio. Columns are sortable, so for example, if I want to sort by yield, one click and SBYI ranks number 1. The last feature I use frequently is the dividend calendar. It's a quick way to see where this month's distributions are coming from, broken down by day. And you can click for additional detail. There are plenty of other features like a stock screener and backtesting, but I'm focusing on the main ones to keep this video short. Let's jump over to simplysafe dividends. The dashboard shows the key numbers and each one can be clicked for additional detail. For example, dividend growth. The sample portfolio shows a lot of dividend growth because of the business development companies like Main Street Capital. The homepage also includes holdings, and just like Snowball, the columns can be customized and sorted with one click. One additional feature I like is the visual representation of the yield history so that you can see how the current yield compares to its 5-year history. The income calendar shows projected dividends in chart and table format on the same page. By the way, that chart shows how lumpy the monthly distributions are when you only have 10 stocks. I typically hold about 25 to 35, which evens out the monthly cash flow and provides a lot more diversification, which I think is very important to reduce risk. simplysafe has a similar monthly dividend calendar to Snowball, and once again, you can click on a specific day for additional detail. So far, these two trackers look quite similar, but simplysafe costs 5 times more than Snowball. So let's see what's so special about it so you can decide if it's worth the extra money. I think simplysafe's most valuable feature is its dividend safety score. It includes a number out of 100, a color, and a descriptive phrase like borderline or safe. The score represents the likelihood of a dividend cut. The higher the score, the less likely there'll be a cut. simplysafe isn't the only one to offer this service, but I think they're the most well-researched. Their methodology and the history of every one of the 805 dividend cuts they've documented is laid out on their website. The scores have proven to be 97% reliable, and these scores aren't generated by AI, they're backed by human research. Before I did my own extensive research, which is the basis for this channel, I used to rely heavily on these scores and I found them to be quite dependable. Now, I don't rely on them exclusively, but they do still weigh into my decision making. You may have noticed that Snowball also offers a scoring system out of 100. If we put them side by side, the results aren't identical, but they're similar. And simplysafe offers 5 scores to Snowball's 4. This highlights another issue. Not every stock or fund is covered by the scoring systems. simplysafe explains their scoring methodology in more detail than Snowball, and if I had to pick which one is more reliable, I'd give the nod to simplysafe Dividends. Other tools offered by simplysafe include a stock screener and sample portfolios organized into themes, including Warren Buffett's portfolio. They also offer 3 in-house portfolios based on a traditional dividend growth philosophy. Those yields are too low for me, but if you like the traditional dividend growth concept, these portfolios are solid. The monthly newsletter is also excellent if you're focused on conservative dividend growth. I've been showing you screenshots from the desktop versions, but both trackers also work well on your mobile phone via the web. And Snowball just announced they'll be releasing a phone app in the coming weeks. I entered the stocks manually, but both trackers allow you to import portfolios directly from your brokerage account. This technology is probably secure, but I don't really like the idea of giving my brokerage details to anybody, so I didn't do it. Snowball has one additional option that might be a good compromise. They have AI that can read a report from your broker. They provide specific instructions for each broker. For example, here are the instructions for interactive brokers. The right method will depend on your personality, but I'm old-fashioned, so manual data entry works for me. If you need any help, both services offer customer support. You'd click here for simplysafe and here for Snowball. Both have responded to me within 1 business day. Let's talk about the elephant in the room, pricing. simplysafe Dividends is $500 a year, no monthly billing available, no promotions. I've been paying that amount since before I retired in 2017, and when I see that charge on my credit card statement each year, I have to admit it does make me wince a bit. Snowball Analytics is $80 a year. Monthly billing is available at a slightly higher rate, and they run promotions, including a discount for armchair income viewers. They also offer 2 higher tiers of service, but I think most investors will choose the $80 version. It includes unlimited holdings. The discount for armchair income viewers is 10%, and that discount is visible once you've created an account, which doesn't require a credit card. Sometimes Snowball runs promotions that offer discounts of more than 10%. If that happens, only the highest discount applies. The discounts can't be stacked on top of each other. So, if you use the link in the description, it will always connect you to the best discount available. I like both of these trackers a lot. If you want to learn about other trackers, this guy reviewed 10 of them. Spoiler alert, he liked Snowball and simplysafe the best. If the dividend safety scores aren't important enough to you to warrant the extra $400+, then I think Snowball is a great deal at $80 a year, less the 10% discount. If you're on the fence, do the free trials for both. Neither requires a credit card. I've already paid the $499 for a year of simplysafe, so I'll keep using them both for now, and when my next simplysafe bill is around the corner, I'll review how often I really needed those safety scores. And at this point, I'm leaning towards Snowball because it pretty much does everything I need. If you're curious about the stocks and funds in that sample portfolio, here's a playlist of review videos explaining how they work and the pros and cons of each. That wraps it up for this look at dividend trackers. More armchair income coming soon.